Hello, good evening. Latif, do you have Zoom installed on it? So should I share the link to your email? I have the link here.
Hello?
I shared it to my mail instead. Let me share it to you.
Hello? Hello?
Latif,
Yes, I can hear you.
I'm having some technical hinges here. My machine
Hey,
is giving me some small problems, so give me like 5 minutes. I want to change the machine.
5 minutes. Okay, that'll be fine.
Okay. Should I forward the link to you? Shit. Yeah. So Jimmy, it's me pressure. Pressure, I don't know why I'm confused. Yeah, come gradually come.
Hello, Alex. Can we start now? Hello, Alex.
When I don't know, but then the oil is the
Senior Latif, can you hear me?
Yes, I can hear you.
Oh, okay. So I can start the lecture, right?
Yes, please.
All right.
So you can share your screen.
Okay, so let me share. Hello. Yeah, can we start? Can we start?
Yes, we can start.
Okay. Yeah, hello. Eh, 30 minutes is almost gone. But anyways, we can. Good evening and welcome to today's lecture. I apologize for the delay in delivering the lecture. I had quite some technical challenges at my end, which caused the delay of the lecture. So I've resolved it and now we can proceed to the issues of the day. So this model is basically about public financial management in Ghana. And the key issues we'll be discussing this evening will be public financial management and its implementation in Ghana. Public financial management and its implementation in Ghana. So let's quickly look at a brief explanation to what we term public financial management. So when you say public financial management, what does it mean? So basically, public financial management is just management of public finances in simple English, management of public finances, and that is public financial management. So it talks about efficiently planning and allocating resources to achieve the goals and objectives of the government. So it's just planning and allocating resources strategically to achieve the set goals or set objectives of the government. So public financial management basically refers to the way public resources are managed in order to achieve public goals and objectives. So that is in plain language what public financial management means. So let's look at the elements of public financial management or a sound financial management system in public sector. So the element one consists of strategic planning. The first element is strategic planning. So the government should have a detailed strategic plan, and this plan must be broken down into the goals and objectives, or in quotes, the government's programs and activities. So the key issue here, or the key element, is the government having a strategic plan. In the next 4 years, in the next 5 years, where do we want to see the economy at? So they will set these goals, and then they will break these goals down into objectives. So that is the first key element of a good public financial management system. The next step is budget formulation. Budget formulation, that is when the government links its plan and cost its plan. So they link their planning or their strategic plan to the resources needed to achieve this strategic plan. So basically the budget formulation, we will look into with details when we are looking at public sector approaches to budgeting. So the second step is having a detailed budget formulation, which start with the development of our fiscal policies or fiscal strategy documents and other activities, which we will discuss later in our lecture. So there, from the strategic planning, you have your budget formulation, and it moves to the budget approval stage, where the budget will be approved by the appropriate authorities or the bodies enshrined within the Constitution to approve their budgets for us. And then we move on to the budget execution stage, which includes revenue mobilization, that is implementation of issues in the budget, and that deals with revenue mobilization, procurement practices, payroll processing, working capital management, and treasury and cash management. So that is the execution stage. And then the next stage will be accounting and reporting on the budgetary information. So that is when the principal spending officers are made to account for what they used our monies for, or report on what our monies were being used for during the fiscal year. So this includes data and information management, keeping proper books of account, preparing regular management account, and preparing the government of Ghana financial statements in accordance with the international standards on public sector, or the international public sector accounting standards and other relevant legislations. So after the accounting and reporting stage, we move to the audit and monitoring stage, where the various authorities or the various bodies responsible for the audit will have to really examine the books to see whether the resources were actually used for what they were stipulated for, or what they were initially allocated for. So at this audit stage, which is the final stage, the appropriate regulatory bodies or the appropriate authorities will then have to examine the books to see whether the resources were used judiciously or was used to achieve the programs which we designed the budget to achieve. So basically, that is the element of a good public financial management system, as the element of a good public financial management system. So now let's look at the legal framework when it comes to public financial management. There are a lot of regulation governing public financial management in Ghana. We first start with the 1992 Constitution. Section 170 of the 1992 Constitution gives us the details about public finances. And when it goes down, it tells you that it establishes the consolidated fund, puts power into the parliament for the approval and implementation of the budget, among others. So basically, section 170 of the Constitution stipulates what and how public finances should be managed. So one of the legal framework for public financial management is 1992 Constitution of Ghana. You can also talk about the Financial Administration Regulation, the Financial Administration Regulation, the FAR, or the Financial Administration Act of 2004, which also shows or details out how public finances should be administered. So section 15 defines charges and appropriation. 14, section 13 talks about the consolidated fund, contingency fund, among others, and other funds that needs to be established by the Act of Parliament. So the Financial Administration Act also details how public finances should also be used. We also have the just recent one, which is the Public Financial Management Act 2016, Act 921. Act 2016, Act 921 is also a legal framework for which public financial management systems are being built on. It details out, when you look at section 12 to I think section 21 of the Act, it details out how the minister responsible for finance should present our budget, among others, and key budget issues are also enshrined in the Public Financial Management Act. So these are some of the legal frameworks for management of public finances in Ghana. So we have the National Development Planning Act, the Financial Administration Act, the Financial Administration Regulation. We also have the Public Procurement Act. We also have the Public-Private Partnership Act, among others. So there are a lot of regulations that govern, or legal frameworks that govern, public sector financial management. And then these are key issues for further reading. So when you look at my slides, I've detailed out a couple of issues for further reading. That is the Public Financial Management Act, Public Financial Management Regulation 2019 LI 2378, the Audit Service Act 2000 Act 584, Local Government Act, Public Procurement Amendment, that's the Act 663, and other related Farm Management Acts. So these are the key legal frameworks for the management of public finances, So let's quickly move on to the sources of finances for the government. Public sources of finances for the government. You start with the key issues that form financing the government activities, starting with the central government. What are some of the key sources of finance for the central government? So one of the key sources of finance for the central government is tax revenue. And the tax revenue may come in two streams for the government. It may come in the form of direct taxes and indirect taxes. So the direct taxes include the Personal Income Tax Act, Personal Income Tax, or the PAYE as we call it. There are also corporate taxes. We also have rent tax, withholding tax, vehicle income tax, tax stamp, capital gains tax, gift tax, which majority of the Ghanaians are not complying with it. If someone gives you a gift, you have to pay the taxes. You have to declare to GRA and pay taxes on it. These are also form of revenues to the government, particularly direct revenue. So gift tax. We also have the royalties tax, that is extraction of natural resources, the royalties that we pay to the government. So these are the examples of direct taxes, which form one of the sources of revenue to the government. There could also be indirect taxes. Just like I said, taxes may come in the two forms, direct and indirect. So the indirect taxes include the almighty e-levy or the electronic levy, the customs and excise duties, valued added tax, national health insurance levy, get fund levy, communication service tax, or what we call the talk tax, and other petroleum taxes. The other indirect petroleum taxes that are being levied on petroleum products. So these also form part of the sources of finance for the government. So the tax revenue, we have the direct taxes and indirect taxes. And we also have non-tax revenue. And some of the non-tax revenue include proceeds from the disposal of public assets, proceeds from sale of goods. So if the government export goods like gold, timber, cocoa, these also form part of the revenues of the government or the income of the government. Fees and charges on public goods and services. So if the government charges for administering services to the citizenry, it also forms part of the revenue of the government. We also have fines, court fines, penalties, and forfeitures. Court fines, penalties, and forfeitures also form sources of revenue to the government or sources of finance to the government. We also have dividends from state-owned enterprise, which is questionable. Majority of state-owned enterprises are declaring huge losses, but dividends from these state-owned enterprises form a source of government revenue. We also have interest from investments in other entities. So the government may undertake investment activities in other entities or securities and other financial instruments. The interest from these financial instruments tends to serve as a source of revenue to the government. We also have rental income from renting out public properties. So if public properties are being rented out, the incomes that come to the government also form a source of finance to the government. So one of the second source of revenue to the government is a non-tax revenue. The third source of revenue to the government is donation and grants from international bodies. So multilateral agencies, donor countries, non-governmental organizations, private organizations may tend to also donate to the government. And these also serve as sources of finance to the government. So multilateral agencies, donor countries, non-governmental agencies, private agencies, International Monetary Fund, World Bank, among others, would also give the government certain monies to finance its activities, and that will also form as part of source of financing for the government. And other sources of finances also include government financing arrangements such as loans, trust monies, borrowings from the private sector, or borrowing from the international capital market. These will also form sources of finances to the central government. So these are the key sources of finance to the central government. So let's move on to the local government sources of finance. So what are some of the sources of finance to the local government? So basically the local government, it may come in generally three forms. One might be decentralized transfers. When you talk about decentralized transfers, we are talking about statutory transfers. These are transfers which the government is being obliged based on some acts or regulations to transfer to these local governments. And this could also form a source of revenues to the local government. Example include the District Assembly's Common Fund, If the government makes transfer to the District Assembly Common Fund, it tends to form as a source of revenue to the local government. If the government gives the local government grants, it also tends to form sources of government, sources of finance to the local government. Example include district development funds, subvented transfers. Subvented transfers would also form part of sources of finance to the local government. They also generate their own money, and that is also a source of finance to the local government. That is IGF. So the fees and charges, like property rates, licenses, hawkers rates, special rates, basic rates, fines, penalties, and forfeitures, among others, tend to also form part of the sources of finance for local government. So in the nutshell, I term them as internally generated funds. Internally generated funds. And also lastly, some of multilateral agencies or donor or NGOs may tend to donate to these local governments. And these also tend to form sources of finances to the local government. So once we've gotten to know the sources of finance to the local government, let's quickly look at forms of government expenditure. The forms of government expenditure. So government expenditure may be classified into 8 major categories. One, we have compensation of employees. So the compensation of employees, this item captures all benefits paid or payable to public sector workers and other associates that provide human resource to the government. So it includes salaries and wages, allowance, national pension contributions, superannuations and gratuities, transfer to government households. These form part of compensation of employees. So one of the major expenditure of the government is compensation of employees, and it's one of the line item of expenditure of the government. The next item is also use of goods and services. So that is basically administrative cost of the government. So the use of goods and services captures the cost of goods and services. That is the input used for administration and provision of public goods and services. So it captures the cost of goods and services that is used for administration and provision of goods and services. So you can have cost of stationery, you can have foreign travel costs, conference costs, among others. These tend to form government expenditure under the line item use of goods and services. The third form of government expenditure is a consumption of fixed capital, and it's a notional charge for the use of non-financial assets in an accounting period. It's a notional charge. So in normal private sector accounting, we will term this as depreciation, amortization, and impairment of depreciable assets. So in public sector, we term it as compensation of fixed capital. So that are depreciation charges on assets of the government. That is non-financial assets of the government. It also forms a form of expenditure to the government. The next item or next form of expenditure to the government is interest payment. So interest payment, and this comprises of interest charged on domestic and external borrowings. Domestic and external borrowings. So the payment or the cost of servicing our borrowings tends to be or form part of the government expenditure. It's also one of the key expenditure drivers of the government. And the next item of government expenditure is government subsidies. So some of our utilities may be subsidized by the government. For example, the government may decide to subsidize electricity or water or fertilizers, among others. These costs of subsidizing these products and services tend to be an expense to the government, and is being captured under government subsidies. We also have grant expense. That is when the government makes grants to other machineries and other offices of the government. So the government can give a municipal assembly or a district assembly grants, or it might tend to give one of its machineries grants. And these grants tend to become an expense to the government. So grants relates to those grants made by the government to other government machineries and offices. We also have social benefits. I know social benefits also one of the key government expenditure. Social benefit consists of cost of social welfare programs and policies of the government. Example include the normal free SHS that came school feeding programs and other national health insurance, among others. Some of the social benefit policies implemented by the government tends to form part of the government expenditure. So social benefits is also one of the government expenditure. And the last thing is other expenditures. So other expenses that are not classified among any of the aforementioned classes of expenditure will be captured under other expenses. And that is also one of the key government expenditure. This is one of the key government expenditure. So having known the sources of revenue, having known the sources of government finances or sources of government revenue and sources of government expenditure, and keeping those in mind, because we will come back to it, we will quickly move to internal control systems in the public sector. Internal control systems in the public sector. We've been hearing internal controls in the public sector. The internal controls are not working. When you say internal controls, what are internal controls? So internal controls are simply those mechanisms or processes that are being designed by those charged with governance or board of directors of the government, or did I say board of directors? Board of directors or management of entities, to provide them reasonable assurance regarding the achievements in the following categories. 1, efficiency and effectiveness of operations. 2, reliable financial reporting. And 3, compliance with various laws and regulations. So internal control systems are those mechanisms or processes or measures put in place by the government to help them achieve efficiency and effectiveness of government operations, reliability in government financial reporting, and compliance with the various laws, regulations, and international standards. So that is what we term as internal controls. So they are mechanisms or measures or processes that are being designed by the government to provide them reasonable assurance in the achievement of efficiency and effectiveness in operations, reliability of financial reporting, and compliance with relevant laws and regulations. So let's quickly look at the components of internal control systems. So COSO, that's the Committee of Sponsoring Organizations, suggests 5 components of internal control systems. And the 5 components are: 1, the control environment; 2, risk assessment; 3, control activities; 4, information and communication; and 5, monitoring. So these are the 5 components of internal controls: control environment, risk assessment, control activities, information and communication, and then monitoring. So these are the 5 components of internal control systems. So let's quickly look at what we mean by a control environment as a component of an internal control system. So control environment basically means that the general attitude of management towards the controls of the organization, or this sets out the tone of the organization and the general attitude of management towards the controls of the organization. So it's basically the general attitude of employees or management towards controls in the organization. So the control environment is basically influenced by people at the top, and it relates to the business environment. So for instance, if you want to assess a control environment of any organization, you immediately enter the organization, you can look at how they receive you. Is there someone appropriate for, is there someone designed or someone, there's someone someone responsible or someone being selected by management to actually take care of the reception? Or is there someone responsible for making sure that X or Y is being done? So this, walking into the organization, looking at these things, you work there, no one receives you, asks you who you are looking for, then it sets a question about the control environment. So the control environment basically is the general attitude of management or the employees towards control activities. You walk into an organization, they are supposed to report to work at 7 o'clock, 10 o'clock, now that people are coming to work. When immediately he logs in, he will just stand at the reception and then be talking with the receptionist, having unnecessary conversations. He's late, the person is already late. Then he will be at the reception also having unnecessary conversations. You walk in and anyone is doing anything. So that should tell you how the whole control environment of the organization is. So the control environment relates to the general business environment or the general attitude of management towards the control of the controls of the organization. And this is largely influenced by those at the top management people. They influence the control activities of the organization. So the control environment relates to issues such as integrity, ethical values, morals, level of competence and professionalism, quality of employees, management's commitment to quality, style of management, organizational structure, clear lines of authorities, duties and responsibilities, and attentiveness of appropriate authorities. So this briefly defines what a control environment is. So right from stepping into your organization, you should be able to tell how the controls of the organizations are functioning, whether the controls are strong or not. So basically, the environment is one of the key control components to assess the effectiveness and efficiency of the internal controls of the organization. So that is it for control environments. So let's look at risk assessment. So the risk assessment deals with the organization's ability to set clearer goals and objectives, identify the various business risks that could impede on the achievement of the objectives, and putting in appropriate measures to reduce those exposures to acceptable level. So risk assessment talks about how management are able to identify the risk of the organization and put in proper measures to minimize or to mitigate the risk to acceptable levels. So that is how the risk assessment of the organization is. So once you're able to assess how management is able to assess risk or evaluate the risk of the organization, it tends to give you a clearer picture of how the internal controls of the organization will look like, whether they are strong or they are weak. So one of the assessments or one of the components of internal control systems is risk assessment. The third one talks about the control activities. That is the key internal control measure. So anytime we talk about internal controls, people think about control activities. They don't really look at the other four components. What they are much interested in is control activities, but the control activities form part of the whole internal control system. Remember, it's a system. So control activities also form part of the whole internal control activity. And that is the real internal control, in quotes, the real internal control. So the control activities are the various policies, they are the various procedures, they are the various activities that have been put in place to ensure that management's directive, goals, and objectives are carried out and achieved. So that is the control activities. So there are policies, there are procedures, there are activities, there are measures that are put in place by management to ensure that the business objective is achieved. So they include what are some of the internal control activities: approval and authorization of transactions, segregations of duties, maintaining proper books of accounts, regular reconciliations, IT access and security controls, information system controls, physical controls like locking your office, making sure that you have a security officer at the office. These are physical controls. Management controls, that are controls that are being set by management. Example includes supervision, management rapid supervision of work, and that is a management control. We also have accounting controls, making sure that all accounting records are reviewed, they are appropriately authorized and approved, they are entered, and then regular reconciliations being done. These are some of the accounting controls. And arithmetical controls, making sure that the figures that are being reported or the figures that are being recorded are right. So these are some of the control activities which form part of the internal control system. So segregation of duties, making sure that the activities, work activities are being divided, and that the work of one is a check on the other. So that is segregation of activities. No employee should start an activity and finish the activity. No, that wouldn't be a better control system. There should be at a point someone supervising the work, someone reviewing the work that is being done, so that the work that the person is doing becomes a check on the other. So that is basically segregation, maintaining proper books of account, keeping proper books, doing rapid reconciliations, which is a key control system, making sure that there are key IT security controls, like making sure your networks, there are password on your networks, password on your computers, and key IT resources of the organization are properly protected. That is the control activities. So these are some of the issues and the control activities. So let's move on to information and communication. So information communication also is a key internal control component, and this is concerned with the way in which information is communicated throughout the organization. So we are talking about information flow in the organization. If we are communicating, who does it move to? Right from the top, right from the bottom to the top, and then from the top to the bottom. How does information flow within the organization? And the flow of information will tell the auditor or will tell the ordinary person how the internal controls of the organization is working. So information and communication talks about the information flow in helping in the achievement of the organizational goals and objectives. So in the public sector, if there are key hinges in information flow, that tends to tell you that that public sector organization has a control issue. So there might be situations where control activities are fine, but still there might be weaknesses in the internal control system, because the internal control system is not only limited to control activities. There are a lot of control components which an individual needs to assess and be able to come out with a conclusion that yes, the internal controls of the organization are working or not. So the last part talks about monitoring. Monitoring here means consistent monitoring of the internal control system to ensure that they are functioning effectively. So the management of the organization should continuously monitor the internal control systems. So the monitoring could be periodic, it could be regular. Periodic here means maybe on a monthly basis, you will do an assessment of the internal control system to ensure whether the internal control systems are adequate and efficient. Or we could do it on a semi-annual, on a weekly basis, or a daily basis. So it could be periodic or it could be regular. So monitoring is concerned with the consistent monitoring of the internal control systems to ensure that they are functioning effectively and efficiently. So these are the components of the internal control systems. Component of internal control systems. So let's look at key principles in designing internal control systems, key principles in designing internal control systems. So what are some of the key principles in designing internal control systems? They include, but not limited to, the following. One, they start with design of appropriate operating policies. So there should be key policies, there should be key laws, there should be key regulations for governing the activities of that public sector of an organization. So if it is civil service, there should be key or relevant civil service acts, relevant operating policies to be used by the civil service organizations or civil service authorities. And also make sure that these key operating policies are working as appropriate. So one, we talk about the design of appropriate operating policies. Two, we look at clear responsibility and reporting lines. Remember, we said information and communication flow is a key control component. So there should be clear reporting and responsibility lines. There should be proper segregation of our duties. There should be proper approval and authorization processes and limits. There should be proper maintenance of records and maximum custody of these resources and records. So public resources and records, there should be clear maintenance or proper maintenance and custody of these resources and records. So let's pick one of the items of the government, like revenue as a part of public financial management. And let's look at how we could look at key controls when it comes to revenues. So let's look at the revenue control technique process. One, there should be design and authorization of revenue policies. So there should be clear revenue policies being designed to aid in the collection of the revenue. So if it is a tax that the government wants to implement, or if it is a rate that the local government wants to implement, there should be a key policy. There should be a key policy document to that revenue so that people understand how that revenue is going to be administered. That is why you see the government implementing e-levy and coming up with the Electronic Levy Act. So that is a key policy for the administration of the electronic levy. So you see them coming up with key revenue policies for each revenue item they want to implement, or each revenue policy they want to implement. So that is one, the design and authorization of revenue policies. There should also be clear responsibility. So we are saying that electronic levy, who will be responsible for the collection of the electronic levy? Is it going to be the audit service? Is it going to be the Controller and Accountant General? Is it going to be the Ghana Revenue Authority? There should be clear responsibilities. There should be clear responsibilities. So the responsible agency for the collection of those revenues or the said revenue must be clearly spelled out. There should be also segregation of duties. So if it is the Ghana Revenue Authority, for instance, that is being designed or being clearly given the responsibility of the collection of the revenue, there should be proper segregation of duties. There should be a unit responsible for the collection of the revenue. There should be the unit within the same Ghana Revenue Authority responsible for the audit of the collection of the revenue. So segregation. The revenue officers who are collecting the money shouldn't be the same people who are responsible for banking the money. So they will collect the money, bring it to the authority. There should be a person who will also collect the money, make sure that the money agrees with the records that they brought. Another person will be responsible for banking the money. Another person being responsible for recording and reconciliation activities. So there should be clear duty responsibilities and clear segregation of duties. Making sure that key revenue monies collected are being banked and proper documentation and maintenance of records. So these are some of the key control policy or control measures the government can put in place when it comes to revenue controls or revenue control techniques. So let's look at expenditure controls. Expenditure controls techniques. So what are some of the expenditure control techniques the government can put in place? One, authorization of expenditure. Before we spend, that money should have been authorized. Before we spend, that money should have been authorized. And the authorization will come from the budget, the approved budget, or the what we call the Appropriation Act. So the Appropriation Act must give clear authorization of the expenditure. Then apportionment of authorization for specific period and spending units. So we make sure that every government unit has its clear budgetary allocations and the specific periods for which the allocations relate to. So there should be apportionment of authorization for specific period into the various spending units. We also talk about reservations and also commitment. There should be funds committed for the achievement of government's objective or government goals. There should be also verification. All government expenditure must be verified. There should be supporting documents to verify that, yes, this transaction really took place and that it is deemed appropriate for payments to be made. And if it is deemed appropriate, the payment orders are being made and then the proper documentations and maintenance of records are being kept. So these are also some of the key expenditure control techniques that can be exerted in the public sector or that can be implemented in the public sector. So let's look at centralized and decentralized controls in the public sector. When you say centralized control system, this is where everything that relates to control systems is being centered with the central government, or it's being the right to approve certain commitment and accounting controls within the public sector is being given to the central government. Here, the central government tells you, the central government here means the Ministry of Finance tells you, this is what you are supposed to do, this is not what you are supposed to do. All commitments must be approved by the ministry. The ministry doesn't give room for the government units to approve expenditure. And that is a centralized control system. Everything is being centralized at the Ministry of Finance or the central government. So it's a system where the central government have the right to approve certain commitments and accounting controls within the public sector. So here, the right to approve lies solely with the central government, and the appropriate body at the central government that is responsible is the Ministry of Finance. But when you look at the decentralized controls, that is where the ministry decentralizes the approvals and authorizations of certain commitments to the local government and the DMM. So the decentralized control system is a system where ministries and agencies are allowed to approve certain commitments and apply control measures within the public sector. So here they are being granted certain rights to approve certain commitments and also design and implement certain controls within the public sector. And that is a decentralized control system, of which Ghana particularly used both the centralized and the decentralized control system. There are certain levels of expenditure which only the ministry can approve. And there are also certain levels of expenditure or amount of expenditure the local government can approve and payments can be made. So that is it for centralized and decentralized controls. Quickly, let's move on to forms of controls, forms of expenditure controls. So control mechanism may be exercised at different levels of government structures, particularly the executive arm, the legislative arm, and then the judiciary. So there are three forms of controls or expenditure controls: are the administrative controls, the legislative controls, and the judicial controls. So administrative controls here means controls that are being instituted by the executive arm of government to ensure the effective use, of public resources. So these are controls that are being put in place by key responsible public officers within the executive arm of the government. And these include maybe key controls that are being designed by the Ministry of Finance, the Controller and Accountant General, principal account officers or account holders, principal spending officers, and other officials put in charge of public resources. So when you say a principal account holder is basically a head or a political head of a covered entity. And the covered entity here means the ministries, the metropolitan, the municipal district assemblies. So the political head of a covered entity or a government unit of Ghana is a principal account holder. So we have the principal account holder, principal spending officers, and other officials put in charge. So controls designed by the executive arm of government is called the executive control. And these are done by key executive arm of government officers. And that is some include the Ministry of Finance, the Controller and Accountant General, principal account holder, among others. So the next control item control form is the legislative control, or these are what we call the parliamentary controls. So these are controls instituted by the legislature or the Parliament of Ghana. And the prime responsibility of the Parliament, as enshrined in the 1992 Constitution, is to provide an oversight over the activities and functions of the executive and other arms of government. And the Parliament exerts these controls through committees. Yes, Parliament exerts these controls through committees. And one of the committees of Parliament is the Public Accounts Committee. So Public Accounts Committee is instituted by the Parliament to make sure that public resources are used for what it's being allocated for or being budgeted and approved for. So the Public Accounts Committee will scrutinize the Auditor General's report and make sure that public officers are responsible for what they used the public funds for. And the Parliament can also exercise one of their oversight responsibility through the Finance Committee. So for instance, when they need to review the minister's budget, they can review it through the Finance Committee, the Budget and Finance Committee of Parliament. And that is also one of the activities they can undertake to ensure that government revenues or public resources are being properly managed. So Parliament can also exert the oversight control through the Finance Committees. And there are also other committees and ad hoc committees of the Parliament. So the Parliament can, at any point in time, establish a committee to inquire about X or Y of public financial management. So these are some of the ways which the parliamentary arm of government or the legislative arm of government can exert control. So the third control is judicial controls. And this relates to court processes that ensures that officials indicted for malfeasance and misuse of public funds are put before court and prosecuted when found guilty to serve as a deterrent to others. So here, that is when key public officials or key public officers who are found guilty for misusing public funds are made to face the law. And that is also one of the controls to ensure effective and efficient public financial management. So the judiciary can also exert these controls. Judiciary can also exert these controls. So having known the forms of controls, so let's quickly note that legislative and judiciary controls are external controls, whilst the administrative controls are internal control measures. So the administrative controls are internal controls, and the legislature and judiciary are external controls. Because the executive is the government in power. The executive is the government in power. So the government is in power is responsible for steering the affairs of the government. So administratively, they are responsible. So the legislature and then the judiciary, these are external control systems that are being designed to ensure that public financial management is being effective and efficient. So let's quickly move to public sector budget. Public sector budget. We've heard a lot about public sector budgeting. When the Minister of Finance is about to read the budget, all eyes will be fixated on the television to look at what the minister has for us. So public sector budgeting is very important and it's a key item when it comes to public financial management. Public financial management. So let's look at public sector budgeting. So when we say budget, what does it mean? Budget is simply a control tool that enables managers of an organization to allocate scarce resources to its objectives and to ensure its judicious application. So a budget is just a control tool that enables management to allocate resources, scarce resources, to its objectives and to ensure the judicious application of these resources. So when you say public sector budgeting is the process whereby the public sector prepares financial plan or prepares activities or programs and then cost these programs. So in public sector budgeting, they prepare the government's activities or government's objectives for the year or the strategic plan of the government for the year, allocate costs to these government objectives, and provide sources of financing these government objectives. So it is basically concerned with the design of the government's plan of the year, allocating resources in the achievement of the government's plan, and coming up with sources to finance the plans and policies of the government. So basically that is it for public sector budgeting. In the Public Financial Management Act clearly states that the minister responsible for finance is responsible for the preparation of the budget of Ghana. So the preparation of the public sector budget is solely the responsibility of the Minister of Finance. So as enshrined in the 1992 Constitution and also the Public Financial Management Act 2016-921, the Minister of Finance is the person responsible for the preparation of the budget of the government of Ghana. So he can be assisted by the Director of Budget or the Budget Office in the ministry in the preparation, but the core responsibility solely lies with the minister. So we can look at the features of public budgets. One, the purpose of a budget is being prepared is to clearly state the government plans or the government's programs and policies for the year and how the government intends to achieve and finance these plans and programs. So it helps or it aids in achieving government objective. And it should also spell out the period for which the budget is being prepared. That is the budget period or the fiscal period. And usually, though Ghana is using the medium-term expenditure framework or the medium-term expenditure plan, which is a rolling budget, but the annuality is that the budget is for a year, the maximum. So it starts from the beginning of the year and it elapses at the end of the year. The beginning of the year means the government of Ghana budget starts on 1st January and ends and elapses on 31st December. So the budget period is a year. A key feature is also the presentation of public sector budgets. So public sector budgets may be prepared based on sectors within the economy, and then these are consolidated into the main budget. So the presentation is that it is being prepared based on the sectors. So when you look at clearly the government of Ghana budget for last year, you see that the key sectors and how the government intends to finance the key sectors of the economy. Supplementary or review budgets is also one of the key features of public sector budgets. So public sector budgets are subject to reviews in the course of the year. That is why the Act 921, that is the Public Financial Management Act, clearly tells the finance minister to do mid-year reviews, and also if there is the need for supplementary estimates to present them. So public sector budgets are subject to reviews in the course of the year. And also one key feature is also public involvement. Public budgets involve the views of the public in the preparation through the use of a bottom-up approach. So the public sector budget emanates from the bottom, right, from the agencies to the districts, the metropolitan, municipal, before it goes into the central government budget. So it's from the people down here to the central government. And it's clearly regulated. So public sector budgeting is clearly regulated and highly regulated. And what are some of the regulations when it comes to public sector budgets? Just like earlier on, I mentioned them, the 1992 Constitution, the Public Financial Management Act, 2016 Act 921, the Public Financial Management Regulation 2019 Act LI 2378 also clearly spells out issues about public sector budgeting, and the International Public Sector Accounting Standards, that is the IPSAS. So clearly IPSAS 24 tells you about how public sector budgets should be presented. So regulation is also a key feature of public sector budgets. So please, for benefits of public sector budgeting, I think these are all self-explanatory issues. Once we review them, we should be able to understand them. They are simple, very simple. It's clearly explained and well explained in there. Let's quickly move to approaches to budgeting in the public sector. Approaches to budgeting in the public sector. So budget format may include line item, or one of the approaches to public sector budgeting may be line item budgeting, program-based budgets, while budget approach may be incremental, zero-based, performance, and activity-based. In some books, all line item budgeting, program-based budgeting, incremental budgeting, zero-based budgeting, performance-based, and activity-based, these are all approaches to public sector budgeting. These are all approaches to public sector budgeting. But some of other school of thought may divide it into two. They may have budget formats and also approaches to public sector budgeting or budgeting. But the bottom line is that line item, program-based, incremental, these are all approaches to budgeting. And not only public sector budgeting, there are approaches to budget, apart from program-based, there are generally approaches to budgeting. So let's look at the line item budgeting or the traditional budgeting. That's the old way of preparing budgets. And this involves grouping individual financial statement items by cost centers and departments. So in the process of preparing, the organization identifies the various sources of revenue to fund the various sources of organizational expenditure without clustering these revenue sources and expenditures according to activities or programs. So once these revenues and expenditure sources are identified, they are used consistently. So the line item budgeting is just the traditional way of budgeting. So the organization or the government will just identify its revenue sources and then make projections, identify its revenue expenditure lines based on departments, and then make projections for those items. So they are being grouped into revenues for the period based on the cost centers and the departments, and then incorporated into one general revenue. And then the expenditure is being broken down the same way to cost centers and departments. And then after that, it's being summed up as a total revenue. So we have the normal traditional budgeting as the line item budgeting. So for instance, maybe the government may come up with its taxes, direct taxes, indirect taxes, the straight line items, non-tax revenues, grants, and other donations, among others. Then we'll come up with the cost centers of departments. So you look at the central government, how they can mobilize revenue at the central government and at the local government. And the same thing applies to the expenditure. So let's look at hypothetical example of line item budget for Kolebu Teaching Hospital. You can see the compensation is there. So the compensation for all the staff at Kolebu. You have traveling and transport, 10,000, utility, telephone, stationery, maintenance of vehicle. So every line item in the financial statement, every line item will come into the budget. Every line item. Even if when they have refreshment, they will have a line item for refreshment in the budget. So every line item will come in the budget. So that is the normal line item budgeting, or what we call the traditional method of budgeting. Please, the person who has unmuted himself should kindly mute it for us. Should kindly mute it for us. So some of the advantages of line item budget: relatively easy to prepare, easy to understand. You know clearly the line items. So this money is being budgeted for travel and transport. This money is being budgeted for entertainment. This money is being budgeted for vehicle maintenance. So clearly it is easy to prepare these line item budgets. Disadvantage is it's difficult to assess budget performance, as budget items match revenue with expenditure. So it's very difficult to assess budget performance. Some of the disadvantages also include possible inefficiency when prepared on incremental basis. Yes, if we are using an incremental basis, it is very high that there will be possible inefficiencies, high possible inefficiency or budget slacks in there. Because if one program or one line item of the government is not really performing, or one expenditure item is really high, because we are using the traditional or the line item budgeting, the following year we will just make adjustments or marginal adjustments to that, and it's being rolled over to the next year. So possible inefficiencies when prepared on an incremental basis, yes, is one of the disadvantages of the line item budget, because at the end of the year, no item is being re-evaluated. We just make marginal adjustment to the budget item, and then it is being rolled over to the next year. So that is it for the line item budget. Let's quickly look at the activity-based budgeting. Activity-based budgeting, just like the name implies, here the government tries to link its activities to its resources. So the government come up with the various activities for the year and then allocate resources to achieve those activities. So that is activity-based budgeting. So it's a method of budgeting based on an activity-based framework using a cost driver data in the budget setting and variance feedback processes. So it's a budgeting technique where individual activities within the organization are assessed in terms of the contribution, their various contributions to the achievement of the organization's objective. So with the activity-based budgeting, we looked at the activity and how it contributes to the organizational objective. And then we link resources, or we allocate resources to those activities. So basically, we look at the activity and then whether it contributes to revenues of the organization or revenues of the public sector. And then we link resources to these activities to help in achieving the said revenues. So that is it for the activity-based budgeting. Please, the advantages and the disadvantages, you can read them as it is self-explanatory. Let's look at a program-based. That is what is being adopted by the government now, the program-based. So here the budgets are prepared from the point of view of specific programs that the government intends to undertake in a specific period and not the various expenditure line items. So here, each program will contain specific line item that it purports to generate revenue from and spend on. So when the budgets are eventually approved, appropriation is made to those specific line items. So the program base was introduced in 2014. So we look at government programs for the year, and then resources are being allocated to the programs based on its contribution. So when you look at typically the government of Ghana, the MMDA budgets, they are particularly PBBs, the program-based budgets, and that is being incorporated into the MTE, the medium-term expenditure framework. So the PBB identify a set of programs and their associated activities within the organization and formulate the budget in terms of the programs, and then link the budget expenditure clearly to the defined program results. So example is where the Ministry of Finance will have a preventive health program, which is broken down into malaria control prevention, cancer control prevention, and then with this breakdown, resources are being allocated. Resources are being allocated to their programs. And as the name implies, program-based. So I have a sample of a program-based budget. Let's quickly look at how it looks like. So this is an excerpt of a program-based budget. So the program here is Commission on Human Rights and Administrative Justice. So that is the program, and this is the budgetary allocation. This is the budgetary allocation, or the anticipated revenue we we expect to get for the program if it is being well administered. If it is being well administered. And these are some of the expenditure items, management and administration of it. So we have the general administration, expenditure, compensation of employees, use of goods and services, non-financial assets, promote and protect fundamental human rights, and then the resources will be allocated to them. So this is currently what the government of Ghana has adopted when it comes to budgeting. It is the program-based budget that is being rolled into the medium-term expenditure framework. The medium-term expenditure framework. So please, let's read on the advantages and disadvantages of the program-based budget. So let's look at zero-based budgeting. So with a zero-based budgeting, it follows the traditional form of budgeting, just that at the end of every year or at the end of every fiscal period, all the budgetary activities are zeroed. And then we do an evaluation and then include the most important programs or policies in our next budget. So for the zero-based budgeting, at the end of the year, every activity is being re-evaluated, and then resources are being allocated for these budgetary activities. So though it's similar like the traditional form of budgeting, but here at the end of every fiscal period, the budgetary allocations are being zeroed. So everything will come to a zero. So if it is compensation, we have zero for compensation, use of goods, zero, social benefits, zero. Now we evaluate every budgetary item. So compensation, how well are we compensating our employees or public sector officers? Should we increase it or should we decrease it? Every evaluation is being done. Use of goods and services, should we increase or do? So we do a critical evaluation of the budgetary activities before resources are being allocated to it. So just like the name implies, zero-based. At the end of every year, the activities are being reevaluated, and then the most important activities are being incorporated into the next year budget. So that is it for the zero-based. So for zero-based, you have to justify your inclusion for you to be included in the next year budget. So one of the advantages is it reduces budget slacks and improves efficiency among others. It helps to achieve goal congruence among others. So the advantages and disadvantages has been spelled out. It's easy to understand them and simple to understand also. So let's look at incremental budgeting. Just like the name implies, incremental. So incremental here means that we have a base, and at the end of every year, a marginal adjustment is being made to increase the base, and that will be for the current year. Once the base is being increased, then we adopt it as our current year budget. So in the incremental budgeting, previous year's budget becomes a base year, and then it will be adjusted by an expected variable, and this will be used as our budget document for the current year. So incremental based budgeting, previous or prior period budgets informs the preparation of the current year's budget by adjusting the base year by an expected variable, and that will be approved and used for the current year. So the preparation of the budget is based on the premise that previous year's activities will repeat in the current year, and the magnitude of the increase is based on the size of the previous year. So here, there is no re-evaluation. We just look at prior year. So prior year compensation, prior year use of goods, prior year social benefits, prior year interest payment, and then we make adjustment to them. So if prior year was 5,000, we adjust it based on the information we have for the next year, and then all other variables being taken into consideration, we adjust them, and that becomes the budget for the next year. The same applies to use of goods. The same applies to social benefits, among others. So the prior year becomes a base, and then it's been adjusted, and then that becomes the budget for the next year. So that is it for the incremental based budget. So we have some hypothetical example of the incremental budgets there. So you see compensation, use of goods, the same budget item for this year, but next year, the following year, we will just do a marginal adjustment, and then that will become the next year's budget to be used. So that is it for the incremental budget. Please, let's read on the advantages and the disadvantages of the incremental budgeting. So let's look at the PFM cycle, the public financial management cycle, particularly the medium-term expenditure framework cycle. So the budget cycle is a continuous process and it has 4 main stages. So let's look at the budget cycle or the public financial management cycle. So one, it starts with the budget formulation. It starts with the budget formulation. So the budget formulation talks about the continuous planning and preparation of the budgets for the government to be used in the ensuing year or the next year. So at the budget formulation stage, some of the activities, the key activities that goes in there is one, the development of the fiscal strategy document. The fiscal strategy document. And contained in the fiscal strategy document is the fiscal or the macroeconomic policy of the government. So in the fiscal strategy document, we have the macroeconomic policies of the government. So at the budget formulation stage, we start with the development of the fiscal strategy document. Then we have the So we have the development of the fiscal strategy document, which contains the macroeconomic policies and the fiscal policies of the government. Then we have the development of the budget guideline. The budget guideline. So under the budget guideline, we have the budget circulars. We have the budget circulars of the government to be issued to the various government machineries or the government units. So at the budget formulation stage, that is where the government designed a fiscal strategy document, and contained in the fiscal strategy document is the macroeconomic policy of the government or the macroeconomic framework of the government. And based on the macroeconomic framework, the government issues its budget guidelines. So development of the budget guidelines and then development of the estimates. And then the development of the estimates. So the key 3 activities that goes on when it comes to the budget formulation is 1, the development of the fiscal strategy document, 2, issue of government or budget guidelines, and 3, the development of the estimate. The development of the estimate. So these are the key activities that goes on in the budget formulation stage. In the budget formulation stage. Then it moves to the next stage. So the budget formulation stage, development of the key fiscal strategy document, development of budget circulars. So the budget circulars are being given to the various government units or the covered entities. So the government have a budget calendar at which stage we expect this input for preparation of the next year budget. So at every particular period in time, the government can measure progress when it comes to preparing the budget for the ensuing year. So that is it for the budget formulation. Now I move on to the budget approval. So at the budget formulation also, there is also budget authorization there. So right from the formulation, the authorization will come before the approval. So the authorization is where the executive arm of government authorizes the budget. So the cabinet and other key executive arm stakeholders will authorize the minister that they are pleased with the budget and therefore can be presented to the parliament. So at the budget authorization stage, that is when the budget is being presented to the president. And it spells out the key policies of the executive arms of government and how resources are being allocated to achieve them and the sources of finance to achieve the said objective. So at the authorization stage, that is where the president authorizes the government of Ghana budget or the public budget. Then it moves to the approval stage. So at the approval stage, that is where the budget is laid before the parliament and then presented. So it's the stage where the budget of the government of Ghana is being presented to parliament for scrutiny, debate, and also for approval. So at that stage, it is at the bill stage. So usually you hear that presentation of the appropriation bill. So at the bill stage, that is where the appropriation bill is being presented to parliament for debate and for approval. So once the parliament is satisfied with the key policies in the budget, the key programs in the budget, it goes ahead to approve the budget for the government. And then that is when the government starts to implement the issues in the budget or implement the programs and policies in the budget. So we have the budget formulation, we have the budget authorization, we have the budget approval. Then we move on to the budget implementation. The budget implementation, that is when the minister responsible for finance and other government machineries starts to implement the key policies and programs in the budget. That is where release of funds are being done to ensure that the government objective for the fiscal period is being achieved. So at the implementation stage, that is where the budget funds are being released for the achievement of budgetary objectives. So there comes the final stage of the budgeting, that is the budget monitoring, evaluation, and reporting. So on a periodic basis, the Ministry of Finances supervises the use of the public funds to make sure that they are within the more expenditure ceilings. The Auditor General will also audit the public funds to ensure that they were used in the right direction. And then Controller and Accountant General and also other stakeholders will report on the budgetary activities and how they were being used to achieve the government's objective for the day. And if there are any digressions or if public funds are not being used for what they were being allocated for, that is when the Public Accounts Committee comes in to scrutinize the report and make sure that the culpable people are made to face the law. So at the monitoring, evaluation, and reporting stage, the key issues there is where the ministry monitors the budgets to ensure that they are within the ceilings, they are being evaluated, and then reports are being prepared on it. So these are the key public financial management cycles, key public financial management cycle, or the key PFM cycle. So it follows that order, that is from budget formulation to authorization, to approvals, to implementation, to reporting, evaluation, and monitoring. Reporting, evaluation, and monitoring. So I have a pictorial view of the PFM cycle there, where you can read and understand. So the formulation stage is there, the approval stage, the implementation stage, monitoring and evaluation. So some school of thoughts puts the approval and authorization under as the same stage, but other school of thought will also separate the approval and authorization. because we'll go for authorization and then it comes to the parliament for approval. So these key cycles form the components of the PFM. So we have the planning, we have the management, control, and accountability. So planning talks about the formulation stage, and then the management talks about the approval stage. We have the control talking about the implementation, and accountability talking about evaluation and reporting. Evaluation and reporting. That's it for the PFM management cycle. The policy analysis, macroeconomic forecasting and budget allocation, PBB, and the medium-term expenditure framework, budget implementation and control, monitoring, evaluation, and then audit. So the slides that I'm skipping are those I earlier on explained there. It is being explained into details in the steps. So you can read them for your consumption. But those are what I have clearly explained them. So when I was talking about the public sector calendar, under the budget formulation, where I said the issuance of guidelines and the calendar, I've extracted some of the budget calendar from the Ministry of Finance website, and then I added it up to the notes. So you could see January, February, the activities that the various stakeholders are supposed to do with regards to the budget, for the following year. So you can read them to have a view, a fair knowledge about it. You can read them to have a fair knowledge about it. I want us to move to the key issues. Our time is limited, so I cannot go detailed into those. So let's look at the key issues. I want us to have a look at the medium-term expenditure, the current budgeting regime, the current central government budgeting regime, the medium-term expenditure framework. So previously, the government of Ghana budgets were activity-based, and it usually elapsed within a one accounting period. But now the PFM, the Public Financial Management Act, the 921, clearly spells out that this time around our government budgeting should be program-based, but it should be a rolling plan. It should be a rolling budget. And the budget should cover fiscal forecasts for the medium term. And the medium term is for 1 to 5 years. So when you look at clearly last year's budget, the minister responsible for finance gave us our medium-term macroeconomic targets. So I will give a copy to Senior Latif to upload on the portal, or you can also fetch a copy and look at it. By the time we are done with this lecture, you should be able to understand key issues within the budget. So when you say medium-term expenditure framework, what does it mean? So medium-term expenditure framework is a transparent planning and budget formulation process within the government. within which the government establishes contracts for allocating public resources to their strategic priorities while ensuring overall fiscal discipline. So in a simple or a much simpler term, the medium-term expenditure framework is an annual 3-year expenditure plan where the government allocates resources to strategic priorities or national strategic policies of the government within 3 years. Within 3 years. So the government comes up with a priority or a plan or a vision that it intends to achieve within a period of 3 years, and then allocate resources to achieve those vision within the 3 years. So it comes up with a medium-term plan and allocates strategic resources, not forgetting overall fiscal discipline, ensuring overall fiscal discipline. So you set those targets and make sure that you stay within the confines of those targets. That is fiscal discipline. We'll be looking at fiscal policy. When you say fiscal policy, what fiscal policy means, and then when you say fiscal discipline, what does fiscal discipline also mean? So medium-term expenditure framework, or the medium-term expenditure budget, is an annual 3-year rolling plan which defines government priorities within the medium term and how it intends to allocate resources for these medium-term objectives and how it also intends to finance that objective. So let's look at the stages of a comprehensive medium-term expenditure framework. So one, it starts with the development of macroeconomic or fiscal framework. So that will fall under the budget formulation stage when we're looking at the PFM cycle. So the budget formulation stage, that is where we come up with the development of the macroeconomic or fiscal framework. And here, because we are using the medium term, we are looking at the next year, but it's been extended. The targets are being extended for a medium term. So for the next 5 years, how do we look at for inflation to be? So the government will make the projections. So next year, we project inflation to be, let's say, 5%. But in the medium term, we are looking at inflation reducing to 3%. And in the budget, the government will clearly spell out the policies, the monetary policies it will implement in order to tame inflation and reduce inflation to the 3% within the medium term. So though the budget is for next year, but it makes projections for the medium term. So the development of the macroeconomic / fiscal framework and the characteristics that the macroeconomic model that projects revenue and expenditure in the medium term. At the second stage, we have development of sectoral programs. So every sector within the economy, the government designs programs for them. So the sector within the economy, the agricultural sector, the services sector, the manufacturing sector, among others, all sectors within the economy, the government develops programs for them. And out of the programs, the government sets the objectives, the output and activities, and makes cost estimations for these programs. And also development of, the third stage is the development of sectoral expenditure framework. So all the expenditure that we expect to incur within the various sectors, resources are being made, or resources are allocated for these expenditure frameworks. And definition of sector resource allocation, that is setting the medium-term sector budget ceilings. So within the medium term, what are budgetary ceilings? What are the maximum expenditure we expect to spend on a particular sector within the medium term, within the next short term to the medium term? What are expected expenditure ceilings for each of the sectors? It will be clearly spelled out in the budget. Then it's at the fifth stage, we look at the preparation of the sectoral budget, that is from within the short term to the medium term, and also final political approval. So presentation of the budget estimates to cabinet and also for parliament approval before we start rolling out the budget. So what are some of the objectives of the medium-term expenditure framework? What are some of the objectives of the medium-term expenditure framework? It ensures more efficient use of public funds. It ensures more efficient use of public funds. It improves our macroeconomic balance and also especially ensures fiscal discipline, because now we are planning in the medium term. So you know that these are the policies or these are the measures I should put in place within the short term to help me achieve X objective in the medium term. So it helps to improve the macroeconomic balance and ensure fiscal discipline. It also ensures in better inter and intra-sectoral resource allocation. It also ensures greater budgetary predictability for line items. Yes, because you plan within the medium to short to medium term, you are able to allocate the resources and properly predict how these resources will be used within the short and medium term. It also ensures more efficient use of public funds and greater political accountability for public expenditure through legitimate decision making. It also ensures greater credibility of budget decision making process. So let's look at the key issues in the PFM Act. The key issues in the PFM Act when it comes to public sector budgeting. So let's look at the Act 91 provisions on public sector budgeting. So let's start with Section 12. Section 12, I've included in it extract of the PFM Act. On your free time, you can have a look at the PFM Act to get more insight into public sector budgeting in Ghana. So let's look at the PFM Act provisions when it comes to budgeting in Ghana. So Section 12 clearly spells out the fiscal policy principles. The fiscal policy principles. When you say fiscal policy, what is fiscal policy? Fiscal policy simply means that the government expenditure and revenue for a particular accounting year or particular fiscal year, and how the government intends to finance it and use these variables to influence the economy. And that is what we term as fiscal policy. So it's basically about... Yes.
I think you are still on the page of central government budgeting regime.
Yes, please. You are still in the central government budgeting.
But you are currently on page 33, but it seems what you are showing to us is at page 30. Like the screen that you are sharing.
Yes, the screen that I'm sharing.
Yes, it's 30, but you are reading from page 33.
So this is page 30, right?
Yeah, what you are showing us is page 33, page 30, but you are reading from 33. So right now you are at fiscal policy objectives, right?
Yes, I'm at fiscal policy objectives.
But where you are, what you are showing us currently from your screen on the zoom up is page 30.
Oh, okay. So let me quickly move to page 33.
Okay.
Please, are you all on page 30? Please, are you seeing where I'm reading from? Are you on the page? I'm at page 32.
You are showing us page. You are showing page 30.
You are still seeing page 30. Wow.
I don't think it's my network. Actually, I'm
Okay, it might be your network because I'm using two machines now, and the other machine I'm seeing page 33.
now you're on page 32.
32.
Yes, now you're showing page 32.
Yes.
Okay. All right. Thank you.
You're welcome. So we are looking at fiscal policy principle, and I've earlier on explained fiscal policy as the government's revenue and associated expenditure, and how the government intends to finance it and use these variables to influence the economy. That is fiscal policy. So fiscal policy is just the revenues and expenditure of the government and how the government intends to finance these expenditure with the revenues, and then how the government intends to use these tools to influence the economy. So if the government wants to reduce inflation and the government wants to use the fiscal side, what are the measures the government needs to put in place at the fiscal side to reduce inflation? And that is the policy that the government can implement a fiscal policy to reduce inflation to that effect. So the fiscal policy principles as enshrined in the Act 921 are one, so the act is saying that the minister responsible for finance should be accountable to Parliament for the performance of their function with respect to the implementation of the fiscal policy. And the fiscal policy shall be developed in the manner that takes into account the impact on the welfare of the current population and the future generation as a whole. So fiscal policy shall be conducted in a manner that avoids abrupt changes in the evolution of the economy. And this will include, so let's look at the guiding principles when it comes to formulation and implementation of the fiscal policy objectives. So remember I said before, the minister responsible for finance prepares the budget, he has to develop a fiscal strategy document. So in the fiscal strategy document, it spells out the fiscal policy principles. And the minister responsible for finance will also have to set within the short to medium term fiscal policy objectives. So within the short to medium term, what are our objectives as a country when it comes to the fiscal side? So the PFM Act is saying that in the development and implementation of the fiscal policy, the minister should take into consideration certain principles. And these are the principles. One, he should design the policy so that the government will be able to mobilize sufficient revenues to finance the government programs. He should also design the policy so that we can maintain our debt level at a prudent and sustainable rate or level within the short to medium term. So section 12, section 2B says that maintenance of prudent and sustainable level of public debt. It's very key in developing the fiscal strategy document. So in the development of the fiscal strategy document, the minister should tell us the strategies he's going to put in place to make sure that he maintains the government debt at a prudent and sustainable level. He also has to ensure that the fiscal balance is maintained at a sustainable level within the short to medium term. So the strategies that he's going to implement to make sure that fiscal balance is maintained at a sustainable level over the medium term, it should be clearly spelled out in the fiscal policy document. He also has to bear in mind strategies to make sure that we manage our fiscal risk in a prudent manner. So when you look at the D of subsection 2, it tells about management of fiscal risk in a prudent manner, and E, achieving efficiency, effectiveness, and value for money in government expenditure. Achieving efficiency, effectiveness, and value for money in government expenditure. So in development of the fiscal policy documents, these are some of the key issues that the minister should take into consideration or consider in developing the fiscal strategy document. So we ensure that the fiscal policy principle takes into consideration that the government will have sufficient revenue to finance its operations, ensure that fiscal balance is maintained in the medium to short to medium term, management of fiscal risk in a prudent manner, achieving efficiency, effectiveness, and value for money in government expenditure. And these are key issues that the Minister for Finance should consider in developing the fiscal strategy document. So the key objective is to ensure macroeconomic stability of the country within the macroeconomic and fiscal framework. So what is macroeconomic policy? So when we say macroeconomic policy, it refers to the government policy, economic policies, it refers to government economic policies such as exchange rates, inflation rates, and other monetary policy rates that could be used to influence the economy. So these are all macroeconomic policies. So macroeconomic policies refers to the economic policies such as inflation, exchange rates, and interest rates, and how these variables could be used to influence activities within the economy. So that is it for macroeconomic policy. So in as much as the government is designing the fiscal strategy document, it should incorporate issues of macroeconomic activity or macroeconomic policy into fiscal strategy document, into the fiscal strategy document. So section 13 of the PFM Act clearly says that is the person talking should kindly unmute himself or herself for us so that we can continue. I want to quickly finish off and then invite room for questions. So section 13 clearly spells out the fiscal policy objectives and also issues to be contained in the fiscal strategy document. So 14, which talks about the fiscal strategy document itself, saying that the minister shall not later than end of May of each financial year prepare and submit to cabinet for approval a fiscal strategy document. And by now we should know what we term fiscal strategy document. So the fiscal strategy document shall specify the medium-term fiscal framework of the government with measurable fiscal objective and targets to guide the short and medium-term fiscal planning for the ensuing year. That is 3 to 5 year period, consistent with the fiscal policy principle and objectives of the government. B should also provide us with a comprehensive medium-term macroeconomic and fiscal forecast covering current development and multi-year projections. Should also provide in the fiscal strategy document a medium-term expenditure framework of the government with a resource envelope and overall expenditure ceiling. The statement of policy measures that the government shall implement in order to stay within the confines of the fiscal policy objective. A comprehensive and quantified fiscal framework statement for the public sector, taking into consideration the macroeconomic assumptions in the fiscal strategy document. A medium-term debt management strategy, including debt sustainability analysis and sensitivity analysis of macroeconomic or macro fiscal risk scenarios. Remember, we said one of the guiding principles of our fiscal policy principles, one of the guiding principles of fiscal policy principle is one, the minister should be able to make sure that he maintain public debt at a reasonable and sustainable level. So in the fiscal strategy document, he should tell the stakeholders or the cabinet the strategies he is going to put in place to ensure that within the short to medium term, the debt levels of the government is being sustained. So in there, he has to provide medium-term debt management strategies, including debt sustainability analysis and sensitivity analysis of the macro fiscal risk framework. A progress report on the implementation of the fiscal strategy document for the previous year. Remember, we said we use the medium-term expenditure framework, which is a rolling plan. So if it is a rolling plan, you have to, in the document, fiscal strategy document, provide prior period reports on the implementation. You have to provide report on the implementation of the prior period activities that were contained in the fiscal strategy document. We also have alignment of statutory and other EMRs funds to national macro fiscal goals. So among others, these are some of the key issues to be contained in the fiscal strategy document. These are some of the key issues to be contained in the fiscal strategy document. So let's look at section 14, which talks about the fiscal policy indicators. Fiscal policy indicators. So in the budget, the minister is going to specify the fiscal targets for the short to the medium term. And how do we measure these targets? So there's the PFM Act clearly spells out how we are going to measure our fiscal policy performances using some indicators. So when you look at section 14 of the PFM Act, it says compliance by the government with the fiscal policy objective, fiscal policy principles, and other enactments shall be assessed in accordance with the following indicators. So in order to assess our performance when it comes to the fiscal and macroeconomic side, the PFM Act is saying that we look at the non-oil primary balance or non-oil fiscal balance as a percentage of GDP, and any of the following: public debt as a percentage of GDP, capital spending as a percentage of GDP, revenue as a percentage of GDP, wage bill as a percentage of tax revenue. So the minister shall review the fiscal policy indicators specified in subsection I after every 5 years. So in the budget, the minister has the projections there. So if we want to assess the minister based on the projections, these are the indicators. So in the budget, the minister is going to tell us that maybe in the short to the medium term, these are percentages for public debt to GDP, capital spending as a percentage of GDP. These are the projections. Revenue as a percentage of GDP, these are the projections. Wage bill as a percentage of tax revenue, these are the projections for the short to medium term in the fiscal strategy document, and in the budget, the medium term expenditure framework. And in assessing the performance, these are the indicators to assess the performance of the minister when it comes to achieving issues in the budget or achieving policies and programs in the budget. So that is why you hear some of the budget analysts and the political analysts talking about our public debt as a percentage of GDP, our capital spending as a percentage of GDP, revenue as a percentage of GDP, and among others, in assessing the performance of the current government. So these are some of the indicators that the PFM Act specifies. So before I end my lecture, I'll quickly share a screen on some of the excerpts of the 2022 budget so that you have a practical view of how the issues we are discussing here are being applied in the budget. So section 15 talks about Please kindly bear with me. I think my computer is acting a little bit slow. I want to scroll to where I left off before. So kindly bear with me whilst I open that slide that I want us to discuss. Actually, So let's continue on. So the Act clearly spells that the cabinet will also should be adhere to the targets in the fiscal strategy document. So subject to Article 76(2) of the Constitution, cabinet shall adhere to the targets set out in the fiscal strategy document in making decisions with implication for public finances, in determining and formulating and implementing policies of the government, and also performing any other functions conferred by the Constitution. So once the fiscal strategy document is being designed and approved, the cabinet and also the executive arms must make sure that they adhere to the fiscal strategy document. So a fiscal strategy document or rule provided for in the fiscal strategy document may be suspended with the prior written approval of cabinet where any of the following occurs. So in the cases that unexpected circumstances have occurred, then issues in the fiscal strategy document may be suspended. So for instance, there is a natural disaster, there is a public health epidemic, there is a war, then the executive arm can suspend issues in the fiscal issues in trying to achieve may suspend trying to achieve the targets of the fiscal strategy document and concentrate on activities that will help curb the situation before we can come back to the document again and then try to achieve the set targets. So for instance, when there was COVID outbreak, the government was making a lot of expenditure spending, and these you could see would affect our fiscal policy indicators, but yes, and they were not within the fiscal strategy document as earlier on spelled out, but because there was an emergency and then we needed to resolve to it, we didn't pay heed much to our fiscal balance or our fiscal discipline, but rather we were spending to just curb down the effect of COVID-19 on the economy before we even come back to looking at achieving the target or coming back to the document and helping in achieving the indicators in the document. So if there is any natural disaster or epidemic, or there's a declared state of emergency, yes, we may suspend the fiscal target of our fiscal rule. An unanticipated severe economic shock, including commodity and oil prices shocks, among others, may also call for the suspension of our fiscal target or our fiscal rules, and any other issue that may occur and will tend to have an adverse effect on the economy, which the government needs to address, then the fiscal target or a fiscal rule may be suspended for a while. So let's look at budget preparation, approval, and management. So yes, before we set salary negotiation for the public sector, the minister responsible for employment must make consultations with the minister responsible for finance and other stakeholders to make projections for public sector salaries and other compensations in respect of the public sector for the ensuing year, not later than April of the current financial year. And also the fiscal strategy documents under section 15 reflects the negotiated aggregates of public sector salaries and compensation for the ensuing year. So let's look at guidelines for the preparation of the annual budget. Guidelines. So the minister shall, subject to cabinet approval, issue guidelines for the preparation of the budget for each financial year and circulate copies of the budget. So when you look at the top there, I extracted a copy of the budget calendar for the Minister of Finance, and it is in the notes. So earlier on, when we are done with the lecture, you can go back to the notes and refer for personal consumption and personal reading. So these copies of the guidelines to each covered entities must be circulated not later than 30th of June every year. And the guidelines would include the economic outlook for the country, the revenue forecasts, the fiscal target in relation to fiscal policy principles, and we've discussed fiscal policy principles. So by now we know, particularly the need to achieve the sustainable level of public debt and fiscal balance, the medium-term fiscal framework, including the key assumptions, the multi-year ceilings for each year, in line with the fiscal strategy document. So all the multi-year expenditure ceilings, compensation ceilings, use of goods ceilings, we did for the ensuing year and for the medium term, that is the short to the medium term, all the ceilings must be included in the guidelines. The ceilings on the required number of staff within the covered entity, the reconciliation for any change in the previous term, medium term expenditure framework arising from discretionary policy changes, baseline parameters, and real allocation of expenditure items. So if there is any reconciliation they need to make with regards to discretionary policy changes by the MMDAs or the covered entities, any change in baseline parameters, and if there is any environment, that is reallocation of one line of expenditure to another, or reallocation of funds from one line expenditure to the another, they should try to reconcile it. How to do the reconciliation must also be contained in the budget guideline. The selection criteria for investment projects, including provision for linking forward recurrent expenditures to investment. The ceilings for the preparation of the budget estimates of the local government authorities. The details of expenditures under statutory funds. So what are statutory funds and alignment and coordination of statutory funds with our fiscal objectives. Remember when we were looking at the fiscal strategy document, we made mention of it, ensuring that all our statutory funds are aligned with our fiscal strategy objectives. So in the guidelines, which will go into the MMDAs, it has to be broken down so that it will serve as a guide to them. We also have details, any other information required from a covered entity to enable the minister prepare the annual budget in accordance with section 21. So the responsibility of the minister when it comes to annual budget. So the minister shall, in consultation with the relevant stakeholders, prepare the proposed annual budget. So when you read the PFM Act, the stakeholders here, we are talking about the budget office and other relevant offices. So the PFM Act establishes offices in the Ministry of Finance. It establishes the budget management office, the budget and the budget management office. It also establishes the debt management office, all in the Ministry of Finance. And it spells out the key responsibility of the budget director and chief director and other key public officers with regards to public financial management. So here the Act is saying that the minister shall, in consultation with relevant stakeholders, prepare the proposed annual budget not later than 1st October of each financial year and submit the proposed budget to cabinet for approval not later than 15th of October for each financial year. So cabinet not later than 30th of October of each financial year communicate to the minister the decision of the cabinet on the proposed budget. Remember I said the cabinet, when we were looking at the PFM cycle, we said that the cabinet must authorize the budget before it goes to parliament for approval. So these are the timelines that the minister needs to meet in order for the budget to get to parliament. So by 1st October, the proposed budget must be ready. It must go to cabinet and not later than 15th. Not later than 15th, it must go to cabinet for approval or authorization. Cabinet not later than 30th must get back to their minister on their decision on the proposed budget. And by 15th of November, the annual budget must be presented to parliament, or the minister shall, on behalf of the president, lay before parliament no later than 15th of November of each financial year, estimate of the government revenue and expenditure of the annual budget for the ensuing year. That is why you see Ken Oforiatta in his white shirt every November trying to present the budget of the government of Ghana. So the estimates shall include all public office, the expenditure of all public offices and public corporations other than those set up for commercial ventures. So those set up for commercial ventures, they are not financed by the Consolidated Fund. So they finance the activities. They are incorporated under Act 992. So they are like private entities who raise monies on their own and then finance their business operations. So they are not covered under the budgets. So their budgets must be classified under programs and activities in the appropriation bill to be introduced into parliament. So the appropriation bill is basically the unapproved budget. So when you read 2022 budget, you see that it is being detailed out into programs and policies. That is where the government will say, use that program, Obatampa, Ghana Cares, and among others. These are programs and policies that are being stipulated in the budget. So it is being classified in that manner, programs and activities under each ministries and sectors within the economy. So it is laid before Parliament for scrutiny and also for approval. So the budget must be based on sound fiscal policy projections and in line with the fiscal strategy document. In line with the fiscal strategy document. So these are some of the key issues to be contained in the budget. The amount of tax outstanding and receivables. These are all key issues to be contained in the budget. I think they are all self-explanatory issues when you read the notes. The notes are simplified so that once you read them, you understand the concept. You understand the concept. And don't also forget to read the other issues I said for further reading, particularly if you really want to understand public sector budgeting and the medium-term expenditure, particularly the PFM Act will give you a brief or a detailed analysis of how the whole budgeting cycle looks like for the government of Ghana. So the budget must provide estimates for the preceding financial year, the current financial, the ensuing financial year, contain a statement of multi-year commitment to be made by the government in the financial year, which shall include a legally binding ceiling on such commitments, including a schedule of major investment project by votes, taking account of the total project costs and expected commitment on the annual budget. These are all issues that are contained in the budget. So the approval stage. So Parliament by not later than 31st of December of each year consider and approve the annual budget and the correlative work plan of the government for the ensuing year, the appropriation bill, and any other bill that may be required to implement the budget. So that is the unapproved budget, that is the appropriation bill, and any other bill that may be required to implement the annual budget. The annual budget approved by Parliament takes effect from the first day of January of the ensuing year. So budgets must be approved by the end of the year, and by the beginning of the ensuing year, the budget should be available for implementation. But there may be cases where the budgets might not be approved by the end of the financial year. So the act is saying that in cases where the budget, at the end of the financial year, the budget is not approved, the minister may make an expenditure in advance of appropriation and submit to Parliament for approval before the annual budget is being approved and then implemented. So where the president is satisfied that the Appropriation Act, in respect of a financial year, will not come into operation at the beginning of that financial year, the president may, with the prior approval of Parliament by resolution, in accordance with Section 180 of the Constitution, and warrant addressed by the minister, authorize the issue of monies from the consolidated fund for the purposes of meeting the expenditure necessary to carry out the services of the government until the expiration of 3 months. So the appropriation in advance will be for a maximum of 3 months from the beginning of the financial year and from coming into operation of the Appropriation Act, whichever is earlier. So the maximum the appropriation in advance could go is 3 months. So within the 3 months, issues within the budgets or problems within the budgets would have been resolved and the budget approved and implemented as such. So in cases where the budgets may not be approved within or by the end of the year, Then appropriation in advance must be prepared and approved by the president to meet government expenditure before the Appropriation Act comes into force. The Appropriation Act for that year comes into force. So that is why when we are having issues with our 2022 budget, still the government was still spending because the appropriation in advance could be used to cater for budgetary activities while we wait for the budget to be approved. So budgeting on a gross basis, the revenue and expenditure of the government shall be entered in the annual estimate and expenditure on a gross basis without being netted off. So when you look at a budget, we have to present separate line items for revenue, separate line items for expenditure. We shouldn't net it off. So we have all our revenue items there, all our expenditure items there. And beginning of the lecture, I clearly spelled out the revenue items of the government of Ghana and the expenditure items. So we wouldn't net it off. The Act doesn't allow for netting off. So all the estimates must be presented as such and must be of gross. Let's look at expiration of appropriation. So expiration means the process where or a period where the budget elapses. Though it's a medium-term expenditure framework, but each budget elapses after 31st, it elapses after 31st December. So after 31st December, each budget will elapse and a new appropriation act will come into force. So when you read the PFM Act clearly, it says that each appropriation act approved by Parliament shall cease to have effect at the close of the financial year, in respect of which the appropriation was made. So if monies within the Appropriation Act was not being spent, it will be returned back to the consolidated fund and the new Appropriation Act will come into force. So when you look at subsection 2, it said any balances of monies unexpended from the consolidated fund in any other public fund for the financial year by the government by the close of the year shall elapse by the 31st of January of the ensuing year. So if any unexpended monies will still return to the consolidated fund before the new budget will come into force. So let's look at performance report. Now the PFM Act enshrines or puts responsibility on the Minister of Finance on a periodic basis to prepare a performance report to Parliament on the budget implementation for the preceding year. So the preceding year, the budget and budgetary issues here that were being contained in the preceding year, the PFM Act tells the Minister of Finance to prepare a performance report, and issues to be contained in the performance report are clearly spelled out in there. There's also media reviews. And I've earlier on explained media reviews when we were looking at features of public sector budgets. We said they are periodic budgetary reviews. So the PFM Act has given the finance minister task of reviewing the budget during mid-year, and if there is the need for supplementary estimates to be laid before Parliament, being laid. So the ministers shall not later than 31st of July of each year prepare and submit to Parliament a mid-year fiscal policy review. So the review shall include the following: a brief overview of the macroeconomic development of Ghana, an update of the macroeconomic forecast, analysis of total revenue, expenditure, and financing performance for the first half of the year, a presentation of a revised budgetary outlook for unexpired term of the financial year, the implication of the revised budgetary outlook for the medium-term fiscal and expenditure framework, if necessary. So the minister responsible for finance will do a mid-year review of the performance of the first half of the year, and if there is a need for the minister to seek for extra funds, the minister may present to Parliament a supplementary budget for approval. And this supplementary budget, the minister should have analyzed its impact on the medium term and fiscal expenditure framework if necessary. So reallocation of funds from a covered entity, that is environment. So subject to any limitation other than those that may be imposed by Parliament, the minister may reallocate funds that have been allocated to a covered entity to another covered entity specified in the annual budget in the event where the functions of that covered entity are transferred to another covered entity. So if there is a covered entity whose activities have been transferred to another covered entity, the minister has the power to reallocate those funds from those covered entities that have been transferred to another covered entity, that funds to be used in managing. So the minister has that power to reallocate funds from a covered entity, from one covered entity to another, provided that the functions of that covered entity have been moved from them to another covered entity. So I think these are key issues you really need to know when it comes to public sector budgeting. Please, on this note, I'll pause and ask for questions. So your questions can come in the comment section, or you can unmute yourself and ask any question you want to ask. Thank you. Please, we can ask our questions. The floor is open for questions. So if you have any questions, you can ask me and I'll help you address it. Please, the floor is still open for questions.
Currently, I don't have any question though, but seems. Hello. Hello, sir.
Yes, please. I'm here.
I'm saying I don't have any question.
So if we are not having questions on this note, I would like to thank everyone for the time that they spent in listening to this lecture. And the recording will also be provided on a platform. And I'll also be on standby for any further questions after reading the slides and listening to the recording. So on this note, I bring the class to an end, and thank you very much for your time. Have a nice weekend.
Thank you. Thank you too for a nice presentation.
All right, thank you.